In this video I'm going to walk you through how I could start my day trading career from scratch in 2025. If I could go back in time, I would save myself years of confusion, thousands of hours and a significant amount in losses. The strategies and mindset I'm going to share with you will allow you to make money regardless. I don't care if there is a market crash, a war or even a recession. I'll take you step by step through the tools, website, mindset and technical strategies that will elevate your trading. You will learn how to simplify trading math, master the market psychology and even test your own strategies in real time to make sure you are trading confidently. First things first, you need the right tools. If you don't have TradingView, get it now. That's where you will be analyzing the markets. By the way, I've got a link in the description that will give you a discount when you sign up for it. Next, pick an exchange. Personally, I use Bybit. Once again, if you want to get started with Bybit, I have linked my referral code in the description below. It will help you get some extra bonuses when you sign up. Lastly, a trade journal, which is in the description. Alright, before we get into the technicals, what even is day trading? Simple. You are in, you are out. No holding for months or praying for pump. You take advantage of short-term moves and stack up small wins that add up over time, scaling your account. But here is the thing, if you don't understand how price actually moves, you will end up donating your money to traders who do. So, before we talk strategy, let's break down the basics. What actually moves the market and how can we use that to our advantage? First of all, fair value gaps. Fair value gaps are areas where the price has moved too fast, leaving gaps in the market. They are your sweet spots for entries. We look for a through candle pattern where you have a strong initial move, a bigger push in the opposite direction, creating an imbalance, and then a candle confirming that imbalance. Price tends to revisit these areas to fill the gap. Imagine the market like a crowded nightclub. There is always an empty space on the dance floor and people will flock to fill it. That's your fair value gap. Now, the market follows trends, and trends move in 5-wave structures. Once the trend completes the 5th wave, it often reverses. Learn to spot this 5-wave pattern so you know when a trend is starting to exhaust. Think of it this way, someone is climbing a staircase with 5 steps. At the start, they have full energy. That's wave 1. Then, they gain momentum and push higher. That's wave 3. By the time they get to the 5th wave, they are tired, maybe even out of breath. They pause and often they turn around and walk back down. That's the reversal. Markets do the same thing. After pushing through 5 waves, the trend gets exhausted, and that's where the correction kicks in. Finally, we have change of character. Change of character is a signal that the trend may be reversing. It happens when price breaks a significant swing high or low. If you ever have watched a crowd walking through a concert, the first few people start moving, then the crowd grows larger and more organized. Eventually, they may leave, signaling the end of the trend. This is similar to how a trend breaks when sellers or buyers start taking control. Now, I know this might sound a lot to absorb, and that's where a lot of people go wrong. They try to figure it out all on their own, but the reality is, trading is about learning from mistakes and successes. That's why I created NeoFlow, a community designed to help traders like you cut through the noise and get access to strategies and resources that will explode your trading potential. In NeoFlow, I will walk you through my exact setup, live trading session and give you a step-by-step guide that shortens your learning curve. Whether you are new or have been trading for a while, you will benefit from the resources available in the group. And the best part, I am offering for a limited amount of people 1 month free subscription for people who join in the next 15 days. Check out the link in the description to join NeoFlow and start improving your trading now. Alright, now you have the basics. Let's finally talk about strategy. I am going to give you the blueprint for how to start trading confidently. With that being said, let's apply this to a real chart. The strategy I am about to cover today is about predicting trend reversals. First, open a clean chart and switch to a higher time frame. I prefer the 1-hour chart to mark out key levels. These are key support and resistance areas where price is likely to react. Think of them as your map. Next, zoom in into the 1 minute. Now, what I look as a confluence for my strategy is underside retests. They are very simple to draw and they just work. For example, here is one there. Think of them like trend lines. Next, you look for a trend. What we want to see is a 5-wave structure forming. That's your signal that the trend is strong, but also nearing exhaustion. Once the 5th wave completes, that's when I get interested. As you see in this case, we have a 5-wave structure. Now, this is where fair value gaps come in. I use an indicator to help me spot fair value gaps, and usually a new bullish or bearish fair value gap appears. That's your entry point, but I don't enter just blindly. I wait for a change of character and an underside retest combined, or I don't enter. So for me to enter this trade, I want a change of character and a fair value gap for my entry. Let's play this out. As we can see, we just got our change of character. I see this middle of this fair value gap, which is near overside retest. I place my entry in there and my stop loss goes there. For my take profit, I look for a major key level. In my case, it's this one. So let's see what happens. And we just secured 4.1 risk factors. This strategy works because it combines structure, confirmation and confluence. It's not just one indicator or one setup, it's a full process that gives you clarity and confidence. Now, the most important thing to take from this video is this. You need to master your trading psychology, because if you don't, no matter what you do, you will face failure after failure, over and over again, without understanding why. You might have read Atomic Habits by James Clear by chance, which teaches you exactly that. When you compound many things into one, at the beginning it might feel like, why the fuck am I doing this? I am not seeing any results. But in the long term, stacking small trading habits and daily routines, you will have that groundbreaking effect and you will start seeing actual success. So I have identified 3 important hacks that will guarantee you rewire your brain and make it think like you are running a business. First, most of you will believe that losing is bad. Ignore these emotions and take them as valuable data that will have an improvement on for the long term if you log them and find your mistakes. That's when you are really going to get better. Second on the list, you may have guessed it, but hear me out. Most people fall to stick to their strategy and plan and take trades driven by emotions and fear of missing out. Just open your oven and put that idea in there. If you don't nuke your entire account in the first 2 weeks, then congratulations. Once you take trades based on strategy and without emotions, I guarantee you will become profitable earlier than anybody did. Last but not least, you need to master your emotions. What do I mean by that? As mentioned earlier, follow your trading strategy, stick to one. If you feel the urge to enter a trade because you think that anytime soon this thing will pump, then trust me, it's not even worth your time pressing the 2 buttons to open it. This is the most common psychological phenomenon traders face. If you master the skill of avoiding with the other 2 most common psychological stresses, specifically revenge trading and overtrade, you are already ahead of most traders. Now, if you don't know already, revenge trading is basically when a person is on a losing streak, lost a lot of money and suddenly he starts taking trades randomly. If you face that, it's better to give up for that day, accept the losses and continue the rest of the day, because if you don't, you will end up losing even more. It's just not worth it. When I lose 3 trades in a row, I just stopped trading for that day and I continue tomorrow. Now, when it comes to overtrading, the wall already exposes it. You just take too many trades. For example, when you have a good trading day, your mind wants money. So what you end up doing? Trade for the whole day non-stop. Now, I will tell you why this is an absolutely bad idea. Because the more you trade, the less disciplined you become. The market rewards patience, not impulse. The longer you sit there chasing pumps, the more likely you are to make mistakes. Give back your profit. You may have wondered, how do you make money with trading? In this section, you will understand how trading really works and how you end up being profitable with it. Trading is a long-term mathematical game. It's not about hitting the jackpot every single day. It's about consistently stacking small wins and managing losses. Even with a 40% win rate, if you manage to risk properly and let your winners run, you can be profitable in the long run, being wrong 60% of the time. How does the trading game calculate their profit? Forget US dollars with risk factors. Risk factors are crucial in professional trading. They stand for your risk percentage of your entire account. If you secure a 5 risk factor trade, you have made 5 times your risk amount. Let's say you have $1,000 and you risk 2% a trade. So when you secure that trade, you made $100. So let's take a look at the table. As you can see, to be profitable with a 40% win rate, you need to hit trades with 2 to 1 risk factor, which means that in an account worth $1,000, you need to make $40 per position, which for the strategy we covered in today's video is a piece of cake to do so. Never and never take trades with 1 to 1 risk factors, which means giving your one risk factor and if you win, you make another one. This is completely bullshit for our strategy. If your risk to reward looks like this, you have to practice your stop loss placement or even holding your trades more. Because remember, we are catching new trends. Most of them have a long way to go. All that being said, let's talk about risk management. If you risk too much on a trade, one bad day can wipe out your entire account. But if you are risking small percentage amounts and you have a strategy that gives you an edge, the numbers start working in your favor. Trading is all about compounding your gains over time. Let's take a look at how you make your trading decisions. Well, to enter a trade, I must have a set percentage which I risk on each trade. I recommend you do that with 1 to 2% if you have a mid to high capital. If your capital is extremely low, like $100, you need to risk more. Maybe even 5 to 10% per trade. Once we have decided our risk, which always needs to be the same, I repeat, always the same. So once again, if you have a $1,000 account that you are risking 2% per trade, that's a $20 risk. If your stop loss is 1% away from your entry, you can calculate how many units of the asset you need to trade based on that risk. The goal here is to avoid overexposure and ensure you don't lose more than we are comfortable with. This is where most traders go wrong. They don't properly calculate the position size, which can lead to over-leveraging and massive drawdowns. Stick to your trading rules, and over time your account can grow steadily without blowing up from a few bad trades. Once you have figured out your position size and have placed the trade, the goal is simple. Let the trade play out according to your strategy. Take profits at your predetermined levels and repeat the process. It's not about hitting home runs. It's about consistent small wins that add up over time. So you've learned the basics of trading, but before you play with real money on the table, there's a smart way to test your skills. Before you start throwing real money into the market, do yourself a favor. Backtest. TradingView has this thing called bar replay mode. It's basically a time machine for price action. If you can't make money backtesting, what makes you think you will make money live? Log at least 50 trades before you even think about going live, or just donate the money to your market and save yourself from the stress. Joke aside, here's how it works. First of all, click on the bar replay button on TradingView. Pick a past date, set the speed to whatever you like, and start placing trades based on what you've learned. Now here's the challenge. Look at least 50 trades from past price action. Track whether you are profitable before you move to real money. Alright, now you have the tools you need to start your day trading journey. You've learned the importance of having the right set, understanding the market structure, and a fully backtested trend reversal strategy that will make you significant profits. You've seen how crucial trading psychology is. Now, it's all about applying what you've learned. Stay consistent, keep refining your edge, and don't let emotions take control. This was it for today's video. I hope it was valuable to you. I will catch you in the next one.